With us today at Small Business Digest is someone who's going to talk about bank cards and other things, and who has to me, one of the great names, Bro- Brookyn Lowery. Am I pronouncing it right?
You are, that's right.
Okay, nice Irish name. Is- But Brooklyn, welcome to the program. And
Thank you.
as we do with all our guests, we first ask a little bit about your personal background. Well, and then about you and your company, and finally a website before we do anything else.
All
So
right, very good.
go
Well,
ahead.
thank you. Thank you so much for having me. I'm happy to be here today. So yes, my background is primarily in journalism. That's where my bachelor's degree is in, but then I also have some English in there as well. So I have spent time doing community news. I have spent time doing media relations, and about 5 years ago, I found my way into financial services and sort of the editorial journalism side of helping people better understand the choices they make um, from a personal finance perspective. So I do everything from write content to edit content to sort of directing a troupe of crack freelancers that can research anything and pull together excellent stories for me with the goal of helping everyday consumers make the most of the tools that are available to them. As for my company, I work for a company called Quinn Street. It's based in Foster City, California. So we do a variety of marketing, lots of personal finance, financial services type things. So everything from insurance to credit cards to home services, things that you would have done around your home, from your roof to your windows, any kind of thing like that. So we have a wide footprint in sort of the everyday lives of just average people. Um, and then through Quinn Street, I specifically work on the credit cards side of things. So my website is cardratings.com. It's about 20 years old. I have not been there the whole 20 years, been here about 5, but we are focused entirely on helping everyday consumers get to know the credit cards that they have, whether they are the right cards for them or if there is something else that might be a better fit for their lifestyle, their wallet, their goals with their credit card, because yes, you should have goals with your credit cards. And so we do a lot of rating and reviewing of specific cards, but also just general information about how to manage those cards, the rewards they offer, the features, the perks that they offer, how to use all of that well so that the cards aren't sort of running your life, but you're running your wallet and using your cards.
And your website?
Cardratings.com. So Cardratings. It's an older site. It's one of the first sites that did this kind of work. There are now lots of us out there, but we are one of the oldest. And so we've been around long enough to know what we're doing and have a good grasp of the breadth of options out there for any consumer. There really is a good credit card option for any person, any small business owner. Depending on what you're looking for, I can probably find a card that's going to be right for you rather than you trying to make your life right for a specific card.
Well, you've come to the right place. Um, well, but you have something specific you want to talk about today. So go at it.
Sure. So very recently, let me back up just a little bit. About once a year, usually in December, we come out with sort of a trends report. We encourage people to sort of look ahead with their finances, and we want to help people do that by doing our best to predict what we think the credit card market is going to do over the course of the coming 12 months. So as you're making your New Year's resolution, we're kind of helping maybe you make those resolutions for your credit cards and for your wallet. So we do that typically in December, and have for a number of years. But as everyone knows, the last, gosh, has it been 18 months now? I think it has. The last almost 18 months has been anything but typical for anyone. And so, trying to look a full year out just seems kind of crazy right now, because everything is changing so quickly, and the landscape of our everyday lives is just shifting constantly right now. And so we decided this year to put out sort of a mid-year trends update. We wanted to look at what we've done, look back at the predictions we made in December, and then sort of say, how did those pan out? How do we expect that to continue for the next 6 months, and maybe just take a peek into 2022? All of this, of course, with the caveat that things sort of stay even with the pandemic, which, to be honest, already since we put this report out, already we're seeing the Delta variant is sort of wreaking havoc in places around the country, and changing everything all over again. But that being said, we did have some ideas about what would come. A lot of what we talked about in December has, in fact, borne out over the last several months. There are still a couple things that we're kind of waiting to see what will happen. I think particularly for your audience, one of the things that really stood out to us, it was a terrible year last year for a lot of small businesses. It seems, I'm not a small business expert, I'm a credit cards expert, credit cards analyst, but from my perspective, the reading that I have done, you either had a small business that happened to be what someone needed during the pandemic, during the shutdowns, and so your business did really well during that time, or you were on the far opposite end of the spectrum and could do nothing. And it seems that there was not a lot of in between. It was really good or really bad for a lot of small businesses. In that same time, and not helpfully probably, a lot of banks really pulled back on their issuing of small business credit cards. So you can't blame them for being a little risk averse in an environment that was so volatile. But we found that we were hearing from small business owners who needed to get some sort of small business credit card, whether it was one that would give them, a 0% offer for 12 months so that they could do what they needed to do and sort of maybe kind of cover that revenue gap that they were experiencing without accruing, the interest of a business loan, which also were a little harder to come by last year. But it just so happens that cards were not being issued with the same frequency that they had been in the past. We tell people all the time, especially in today's economy, traditional small businesses, of course, are still there, your mom and pop shops, and then larger, but so many people run what could be considered a small business on the side, whether they write freelance articles a couple times a quarter for a publication or two, or they drive for a ride sharing service, or they operate an Airbnb property. There are lots of opportunities to sort of have these side small businesses that, now more than ever could use the help of a small business credit card to help you keep your personal finance and your business finances separate. So, we know that people apply for these cards all the time, even people who are not maybe doing traditional small businesses, what we think of as traditional small businesses. And what we kept hearing is that banks were just not coming alongside them in that season. Again, understandably, there was some risk aversion given what we didn't know at the time. It was happening with personal credit cards too, people who maybe would be approved, but were getting lower credit limits than they were used to seeing. or instead of getting instant approval when they applied online, we're instead getting sort of the screen that says, we can't approve you right away, we'll send you a letter, or we'll review your application and get back to you soon. So, that kind of stuff was happening all over the place. The good news for small business owners as we've gone into this first half plus of 2021 is that cards seem to be coming back online. Banks seem to be being more willing to issue credit cards for small business owners again, which is really good news. The biggest indicator of that for me on my side of things is that banks began marketing them again. We began seeing them sort of reappear in their marketing materials, and we began seeing commercials for them again. And when they had pulled way back, they just disappeared from the landscape altogether. You had to look for them to find them. That's not to say they weren't out there, but they were definitely harder to come by. So the good news is that business owners are potentially more able to get them now than they have been in the last 6-8 year. My goodness, I'm shortening it. It's actually more like 16 months. What is time these days? But so that is one thing that we have noticed in the trend report. We anticipated that would happen as the pandemic we all got our footing a little bit more as things started to reopen, and it in fact has. So that's great news for small business owners. Now, they obviously have dozens of other hurdles that they are at this point trying to overcome. But we can hope that at least having another tool in their toolbox to help them get there is going to be useful to them. So that was, I think that was the biggest one of the bigger positives that came out of this trend report for the last 6 months or so of 2021. Another thing we have noticed is that while credit cards last year, a lot of issuers pivoted to really focus on their cashback rewards cards for obvious reasons. People were not traveling. And so a lot of issuers just really kind of turned away from those flashy travel rewards cards and looked at their cashback cards. That has continued, and I think that is probably because issuers have realized that cashback is always going to be something that is useful, and they have known that. We've done studies at Card Ratings that routinely show cashback is the favorite kind of rewards card, and even though it's travel rewards that seem to get all the headlines and the flashy billboards, but it's cashback rewards cards that the average person can really understand and put to use. So we saw a lot of focus on those last year. That has continued, but as travel has really restarted, we have also seen that there have been mega travel bonuses that have come out for the credit card industry. Not unexpected. This was one of our predictions. It has come to pass that we would just, as travel ramped back up, and July 4th, I can't remember exactly the statistics, but I believe July 4th was among the busiest travel holidays that we have seen in a while, if not ever. So given that, banks obviously want to meet that demand, and so they have ramped up their travel rewards bonuses in a lot of cases, just trying to bring customers back into the fold, many of which maybe closed those cards during the pandemic because they weren't being used. They didn't want to pay the annual fee on them, and so they closed those cards down. Banks are now trying to lure people back with some really great bonuses. And, when I say lure, I don't mean it in a bad way. I mean that there are some fabulous opportunities to take advantage of right now if you're in the market, if your finances are in a place to do that. So we've seen some really great bonuses come out of that. Alongside those great travel bonuses, banks have done a really nice job of continuing to offer sort of everyday perks and features. They rolled a lot of these out last year to help people still find value with those travel rewards cards that they weren't being able to travel with. We saw banks roll out sort of programs that were designed to reward people for staying at home or to make their rewards valuable, even though they were staying at home. And several of those have stuck around, which is a win for credit card consumers, because that is, any additional flexibility, any additional value you can get from your credit card is going to be a good thing. So we have seen that continue, which is fantastic. Some of those extra bonuses and extra perks. We have also noticed. I'm sorry,
Wait,
go right ahead.
I
I've
want to
talked a lot.
interrupt you. Your website again for our audience. Let's stop that right there and tell us.
Yeah, the website is cardratings.com.
Will you spell it out?
I will. It's CARDRATINGS.com.
Okay, let me stop in and ask you two questions,
Sure.
which came up in something else. Number one, um, uh, the various scores, FICO scores, etc.,
Mhm.
have gone all over the place because people, and one and two, it seems that if you close a card, your FICO score gets hurt.
Mhm.
And but the first question is, um, how are people dealing with the fact that they're going to be late or etc. And FICO is not making the services have not done it. So can you address those issues?
Yeah, I can. I can to some extent. I think the first thing that's important to understand is what contributes to your credit score. And when you say that when you close a card, your credit score can take a hit, that is true. But the reason that it takes a hit is not necessarily because you closed the card itself. It's because your credit utilization ratio has changed. So when we talk about credit utilization, we're talking about the amount of credit available to you compared to the amount that you're actually using. So if I have two credit cards and they both have $5,000 limits, so I have a $10,000 credit available to me, and then all of a sudden I close one of those two cards. Well, suddenly I only have $5,000 worth of credit available to me. And maybe that $1,000 balance that I had on my card, when I'm looking at $10,000, that is minimal credit utilization. But all of a sudden, when I have that, my credit utilization skyrockets. So what the FICO score is actually reflecting is the change in your credit utilization when you close an account, in most cases. If it's your oldest card, or if it is your only card, those will also impact your FICO score. You don't want to close your oldest credit card because another portion of your score is related to your length of credit history. So if I have a card that I've had since probably 2002, 2003. And because of that, I do still use the card, but even if I didn't still use that card, I would keep it open because it is my oldest credit card. It shows in my credit history that I have maintained responsibly an account for 17 or 18 years. And that bodes well for me. That is a good mark on my credit. So credit scores are flawed. They just are. And the credit scores reflect your borrowing and your payment history. They don't reflect your income or your planning, or even on some level your ability to get out of bad situations. It looks good when you manage to pay off a loan, but paying off a loan does not immediately erase the fact that you missed several payments along the way to paying off that loan. So credit scores are certainly flawed. And for a lot of people, especially in the last year, who have found themselves with lacking in income and really having to tighten the belt and perhaps take out a loan or perhaps use their credit cards more, so that credit utilization ratio is not as good as it once was. Those credit scores have taken a hit. That said, and I can't remember when I saw this, but it has been within the last couple of months. Most recently, credit scores in America are at an all-time high on average. So that sort of indicates that, one, I think that financial literacy and education, people that have access to more of that now, and hopefully through sites like Card Ratings and others, do have a better understanding of how to positively impact their cards, or I'm sorry, impact their credit score. So hopefully that is happening. I think that, there's credit scores are such an imperfect system, and that's why a lot of credit cards, that is not the only thing they look at. That's why when you apply for a credit card, you do have to note your income. You do have to talk about, if you're applying for a small business credit card, they're going to want to know your annual revenue. Obviously, that's probably for a lot of businesses is lower for the last year, so you're going to want to take an average of that. But in general, credit cards are looking at more than just credit scores. So it's an important part of it, and will likely affect offers that you see. If you are mailed a card offer, which you shouldn't necessarily take if it shows up in your mail anyway, but if you are mailed a card offer, that your credit score is likely what has influenced why you got that score, why you got that offer. And the same is true for.
Let's stop right there. You should not take the one that's sent in your mail.
Not always, not immediately. There could be. It could be that it's the perfect offer for you. But the bottom line is, the banks are not interested in how well the card will work for you. The bank is interested in how well you will work for them, and how much money you will make them, and whether you are or are not a good risk for them on a loan like that. So sure, if you get an offer in the mail, check it out, dig into it, look at it, see if it is something that fits into your lifestyle. If I were to get just as an example, if I would get in the mail a fabulous gas rewards credit card offer, it may look great, and it may tell me that I can get 100,000 points if I spend $1,000 in the first 3 months. This is completely hypothetical, by the way. I actually do not know of a card that is quite like that. But my point is that it would not work for me long term. I don't drive that much. I happen to live in the city. I don't need to drive all that often. I don't spend that much on gas. So as fabulous as that gas rewards card looks for me, it probably is not right for me. And so maybe it's the thing that triggers me saying, hey, I need to examine my credit cards. I need to take a look at my wallet and my lifestyle and make sure that the ones that I have are still working for me. And if they're not, I make some changes, whether I close the card, which we already talked about, and that is something you can do. It's not something I would necessarily recommend everyone do just on a whim. There are other options besides closing a card. You can downgrade the card often. If it's one with an annual fee, you can call the bank and say, I don't want to pay an annual fee on this card anymore. What else can I have within your bank that will keep my account active, will maintain my credit history, will not require a hard credit pull, which is very good for your credit score, but that would get me out of the annual fee. And that can happen with a lot of banks, especially the larger banks that have multiple credit card products. They can downgrade you to something else, and it may actually work better for you in the moment in the season that you're in. So there's nothing wrong with that. If it's a no annual fee card, maybe it becomes your sock drawer card, and it's there, and you put something on it every couple of months, every month. just to keep the account active so that the bank doesn't shut it down on you for inactivity. But that, you know, there are options with that. At the end of the day, we recommend that anyone take stock of whatever cards they have in their wallet at least once a year, and also anytime there is a significant life change. So if you get married or divorced or have kids, or you move, or you maybe if you change jobs, if you know you used to work at home but now you're commuting, or vice versa, given the way the last year has gone. We want people to take a look at the credit cards in their wallet and make sure that they are still doing for them what they need to be doing, rather than just sort of kind of being a mediocre financial tool. You can have an excellent financial tool. There's no reason to settle for a mediocre one.
Okay, well, unfortunately, we're coming to the end. Could
Sure.
you give us three recommendations for us? First, give us your website again, then give us three recommendations that you would do for a small business. Unfortunately, well, you could go on for an hour, but we're getting close.
Yeah. Okay. So my website again is cardratings.com. That's CARDRATINGS.com. And as far as recommendations for small businesses, my goodness, I guess the first thing I would say is hang in there. It's never easy to run a small business, but it has been a whopper of a year for a lot of you. So hang in there. I will tell, in a lot of ways, I think small businesses are like consumers. The first thing you got to do is you have to ask. If there's something you need from your financial institution, from your bank, ask. It cannot hurt for you to just say, you know, could you, is there any kind of lower credit or any kind of lower interest rate that I am eligible for? Is there a balance transfer offer that I might be eligible for? If we're talking about a situation where you have some debt that you're trying to deal with, you can always ask. You can always ask for them to waive the annual fee of a card. It's not going to hurt anything for you to just raise the question. So I would say be vocal, advocate for yourself when it comes to the financial well-being and the financial tools that you have. Ask the questions, do your research, and go straight to the source if that's what you need to do. So beyond that, I would say take stock of some of maybe the tools you don't even realize that you have. So if you already have a small business credit card that you have used in the past, take a look at it. Assess it just like you would if you were a consumer. Make sure that it's still the right card for your small business in this season that you are in. Ensure that you are getting everything you can possibly get from that card. You know, make sure that the fine print details are being put to good use by you. And that would be my last point. My last recommendation is as you are looking at tools, as you are looking to apply for cards and thinking about your future and the tools that you're going to use, read the fine print. We don't like fine print in this country, and that is all well and good, but you could very well be missing out on some great benefits. There are cards that help you take care of your employees, save your business money, things like cell phone protection, cell phone insurance that is covered by your credit card rather than you having to pay for it. So there are certainly things out there. You just have to look for them. You've got to ask the right questions. You have to be willing to put in the time to find what is available to you. And, you know, above all else at this point, just surround yourself with people who are going to support you, because it is not an easy season for anybody, but particularly for small business owners. So find your team and stick with them and let them support you.